Hey guys, in this video I'm gonna cover market structure, which is the first technical subject, right, that I've covered in the ebook. So for those people that have viewed the SMC strategy ebook, you'll see that market structure is the first lesson, right? And the reason why market structure is the first lesson is because this is what enables us to understand what form the market is in, right? So we see when somebody shows you like anything to do with trading, you see different charts, different candlesticks, and all those things, right? So what makes up those charts and what makes up candlesticks, right? So first and foremost, what makes up those candlesticks and charts that you see? It's basically price, right? Price is the movement of value of that security. So if you are trading currencies, if you're trading stocks, all that simply means is that the value of the stock or the currency that you're trading, right, it changes in time, right? It changes in time, and that chart is a composition of that value, which is price, and the time it's moving in, right? So yeah, so that chart is a composition of that, and price is what we're gonna focus on, right? Because price is what we're gonna determine, and that's what we're gonna look out for in terms of where it's going, right? Where price is going. Is it price gonna increase in value, or price is gonna decrease in value? And depending on our different technical concepts and confluences built around that, we should be able to define whether price is gonna go up or down. Yeah, so market structure helps us to determine what price is currently doing, right? So market structure is basically a lens that covers different phases in which the market can be, right? So when we look at the charts, right, when we look at the charts, there's always a phase that the market is currently in, right? And the phases are quite a few. There are only 3 phases in which a market can be. So a market can either be in an uptrend, right, which simply means that it's pushing up, right? It's going up, as the name says itself, uptrend, and then it can be either ranging or can be in a downtrend. So downtrend obviously is the opposite of an uptrend, meaning it's pushing down. So uptrend is pushing up, downtrend is pushing down, and then ranging, it's basically moving sideways, right? So what happens when the market is in an uptrend? What makes it distinctive to when it's in a downtrend? Simple. So when the market is an uptrend, it simply means that the buyers are in control, right? The buyers are in control. Hence, the other name of an uptrend is a bullish trend, right? So if somebody says the market is currently in a bullish trend, meaning that the buyers are in control, right? The buyers are pushing the market in their preferable direction, which is up. And then the downtrend is the opposite of that, right? When the market is in a downtrend, we're saying the sellers are in control. And then the other name of the downtrend is called bearish trend, right? The bears are in control, right? So there's this notion around the market that there are bulls and bears involved, right? There are bulls and bears involved, and that has enabled traders to distinct the market in different phases. So the bulls, right? So the bulls are the buyers, and the bears are the sellers, right? So when I say bearish trend, it means that the sellers are in control. Bullish, that the buyers are in control, right? So as the market moves either up, down, or sideways, right, it forms highs and lows, right? It forms highs and lows. It goes up, it comes down, it goes up, it comes down. In that movement where it goes up and down, it makes a sequential movement of dynamics of highs and lows, right? So it leaves a high up there, it comes down and makes a low, goes up and makes a high, right? So what you notice that whenever the market is in an uptrend, right? So this is an uptrend, a drawing of an uptrend. So whenever you see the market is in an uptrend, you will, in most cases, you see that the market is, right? The market is forming highs, highs, and breaking them, right? It goes up, forms a high, comes down, leaves a low, right? It goes up and breaks past this high, right? And comes out and leaves a low and breaks past this high. So what you notice is that price is breaking highs, right? And then it's making lows that are higher than the previous low, right? So in an uptrend, the characteristics that we have for an uptrend is when price is forming highs that are higher than the previous high, right? And lows that are higher than the previous low. So that's the characteristic of an uptrend. So when somebody says to you and goes like, why are we in an uptrend right now? Simply tell them because the highs that have been formed currently are higher than the previous highs, right? So that indicates that we're in an uptrend. And then with the downtrend, it's a reverse, right? We tend to see price forming lows that are lower than the previous low and highs that are lower than the previous highs, right? So as you can see, price goes and makes a low, right? The low, it pushes and makes a high, and then it breaks past this low to form a low that's lower than the previous low and goes for a high that's lower than the previous high, and then goes for a low that's lower than the previous low. Then it makes that sequential move, right? So until price breaks past the high, right, forms a high that's higher than the previous high, that's when we would say price has shifted from a downtrend to an uptrend, right? So that's how you characterize these things. And then with the range in market, we have sideways movement. So in this case, we got equal highs and equal lows, right? You see the market not breaking past any highs and not breaking past any lows, just constant lows and constant highs, right? So this is quite easy to characterize. So yeah, so this is what makes up market structure. So when you go on a chart, you'll be able to see that the market does comply to these notions of an uptrend, downtrend, or range in market. So when the market is controlled by the buyers, you tend to see price breaking past the highs and breaking past the lows if it's controlled by the sellers, right? So an example of that, right? An example of price breaking past lows and breaking past highs. So this is a chart on US30, and I'll show you. For instance, in this case, we had price pushing to the downside, right? So we'll characterize this as a downtrend because evidently we can see price, right, forming lows. So let me try to push this down a bit, right? So we see price here forming lows, right? It formed the high previously. So we see price form the high previously, and then it formed the low, went for another high, and then broke past the low, right? Went for another low, broke past this, made a low that was lower than the previous low, and then we see price form a high that's obviously, right, lower than the previous high, and then it goes down here, forms this low, right, and then the low, it goes for a high, right, forms a high that obviously is lower than the previous high, and then it goes for a low that's lower than the previous low, a high that's lower than the previous high, and then it goes that. So this itself should tell you that price is confined to these structures. You can see price is pushing down, right? And this should tell you that sellers are in control, right? Because they keep on breaking past this high, these lows, past these lows, past these lows, right? So this is an example, right? So that's an example of a downtrend, right? And then another example of an uptrend is this case right here, right? So in this case, as you can see, we see price doing the same thing but upside, right? So we see price form a low, right? And then from that low, try to reduce this a bit, price goes and form a high, right? And then it goes and form a low, it goes and form another high, it goes and form another low, right? So let's leave that there. And then it goes and form another high that's higher than the previous, right? It's higher than the previous high, and then it goes for a low that's higher than the previous low, right? And then it goes for a high, right? That's higher than the previous high, another low that's higher than the previous low, and then another high, right? So this is what characterizes an uptrend, right? This is what characterizes an uptrend, and right here is what characterizes a downtrend, right? So you'll be able to read market structure through this. You'll be able to read market structure through this. Just look at the lows and the highs in the market, and again, you'll be able to determine whether price is in an uptrend or a downtrend, right? So I want to give you guys an example of a range and a sideways market. So this right here is an example of a sideways market or a range market. As you can see, price hasn't been breaking any highs, price hasn't been breaking any lows. Price is just within this constant movement right here, right? So we see price go for a high, for a low, and then it goes, right? It goes for a high, goes for a low, right? Goes for another high, goes for another low. As you can see, it's not breaking past any highs, it's not breaking past any lows. It's just within this range, right? So this is an example of a ranging market, right? So the markets are characterized in that way, right? It's either we're in an uptrend, or we're in a ranging market, or we're in a downtrend. And what differentiates it is how it forms the highs and the lows. It's quite a simple concept. All you have to do is just practice, 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 and you should be able to tell that, right? So the next topic I'm going to cover is more on market structure. See you guys in the next video.